Hello from the New York Stock Exchange. I'm Olivia Bono-Voznenko for Modern Wall Street, here with Sarge Guilfoyle. Stephen, how are you doing today?
I'm about as good as you can be on a Thursday afternoon. How about yourself?
Very good. Thank you for asking. Well, let's first start with economic data. Core prices seem to slow down a little bit. Weekly jobless claims, a very low mark. Were you at all surprised by this?
A little bit. I thought we'd have higher core inflation, and apparently so did Dennis Lockhart, the president of the Atlanta Fed. He's been one of the more hawkish guys. He's not on the FOMC, but he is influential. And he's been one of these guys warning about inflation, kind of getting people fired up about 3 interest rates hikes this year instead of just 2 or 1. And he backpedaled today. If he's going to backpedal, I guess I'm going to have to backpedal because 0.1% month over month increase in core prices, 2.2% increases year over year when we've already been at 2.3 for 2 months just really isn't going to cut it, and it probably is going to delay the next interest rate hike.
All right, well, let's get into the major story today, bank earnings. JP Morgan mixed, BlackRock, Wells Fargo, Bank of America disappoint. Do tell us more.
Trading in the first quarter wasn't the business it used to be. It's made a little bit of a comeback in late March into April, but it's just not there. And investment banking isn't there either. It's been pretty much a blank 2016 for that. So these firms have had to rely on mortgages, commercial real estate, and revolving credit, basically to sustain their balance sheets, which is why a firm like Wells Fargo did well, because mortgages are really a bigger part of their business than the others. And JP Morgan really, when you consider what they were up against, they really surprised quite nicely and carried the whole sector, in fact, the whole market yesterday, in a risk-on phase that really hasn't come off yet.
And how will we see the market shape up tomorrow?
Before we get to tomorrow, we got to get through China. Yeah, China has a lot of numbers tonight. They got GDP, industrial production, retail sales, and we've seen increased demand for crude into China. We've seen increased exports out of China. So odds are, while people are only expecting maybe a 6.7% GDP out of China, they might have, especially since they like to engineer things this way, we'll probably have an upside surprise for GDP tonight for China. And then we have all the industrial production and manufacturing numbers here in the U.S. tomorrow. So we have a lot of wood to cut before we get to tomorrow's trading.
Okay. And how will they affect tomorrow? How will we see the markets close and into the next week?
I guess we have to see how the futures react to China and how the market itself reacts to those numbers in the morning. And then next week, let's not forget, we have a lot of tech earnings next week, and we have Netflix on Monday, which is pricing in about $6 worth of volatility, which means if you're buying a neutral straddle, you need about a $12 move just to make a penny. So that's going to be the focus going into Monday, is going to be those Netflix numbers.
All right. Well, from econ to earnings, and don't forget about China, we always have Sarge Guilfoyle here to keep us in the know. Thank you, Stephen.
Oh, thank you, Olivia.